I'm Motley Fool Canada Chief Investment Advisor Ian Butler, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing the big news of the week, and it's been a week full of big news. My guest today is Motley Fool Canada Senior Analyst Nick Seipel. Nick, thanks for joining.
Great to be here with you, Ian. We're in different seats today.
Indeed, indeed. I've got the host hat on here, and you're going to spill some wisdom on our audience. So, while fourth quarter earnings reports have just started to roll in for the Canadian market, the U.S. is right in the thick of it. We've had a bunch of big companies report this week. However, on Monday, the spotlight turned away from earnings and shone brightly on a new player in artificial intelligence that's just appeared on the world stage, known as Deepseek. Nick, can you take a minute or so and help us to understand what Deepseek is?
Sure. Short answer is Deepseek is a Chinese AI firm that, as you mentioned, has captured the attention of investors and technologists alike over the past week. So, zooming back in December, it launched a free open source large language model that it claimed it developed in just under 2 months for a reported cost of under $6 million. Then in January, it followed that up by releasing R1, a reasoning model that it reports and third party tests confirm outperforms OpenAI's latest models. The DeepSeek success has brought into question whether the hundreds of billions of dollars that's currently being poured into AI infrastructure is really necessary to deliver top of the line performance, particularly because Chinese firms like DeepSeek have been subject to export controls that limit their access to cutting edge chips like NVIDIA and others produce. Critics have also pointed out, though, that DeepSeek's reported costs, that under $6 million number, only include the final cost for one training run rather than the total cost of R&D spent to develop the model. And some have even claimed that DeepSeek is using illegally accessed and undisclosed chips to deliver its breakthrough to the market. Whatever the case may be, this news injected uncertainty into a market that was really convinced that AI CapEx was going to go on indefinitely. And if there's one thing the market hates, that's uncertainty.
Totally. And so I don't think either of us count ourselves as technologists by any stretch, but we do know our way around the stock market. So after what you mentioned, after what's been a near straight run higher for the stock price of any company associated with AI for just about the past 2 years, these headlines sent shares of many of these companies just spiraling. NVIDIA, which had been the largest company in the world by market cap, lost a whopping $589 billion during Monday's trading, which was the largest single day loss in history. But while NVIDIA grabbed the headlines, it was far from alone. So, Nick, here's the question. Did Monday's AI meltdown open up an opportunity in NVIDIA or any of the other dozens of companies that took it on the chin?
Well, I'll preface this by saying technology predictions are really hard because things can change really quickly, like what we just saw in the past week. That's part of why Warren Buffett famously says that he doesn't invest in technology. That said, I personally don't think this is an opportunity to jump on NVIDIA. We're at 48 times trailing earnings, 27 times trailing sales. The market, in my opinion, is still pricing in a continued CapEx boom. But if you squint, you can see signs that maybe things are starting to slow. You mentioned we've got some earnings reports starting to come out. Microsoft released its second quarter earnings after the DeepSeek news, and it's noted that while its AI spend will grow in 2025, that CapEx growth rate is going to begin to slow in 2026. Moreover, both Meta and Microsoft took pains to emphasize how flexible their AI infrastructure is, that as demands change over time, they can redeploy it to other applications, really trying to justify the spend they're putting on the market today. Lastly, this one's kind of glib, but SoftBank is rushing to throw capital into AI infrastructure. If you look at these past big technology buildouts, they always seem to come in closer to the top of the cycle than the bottom. All that to say is chips, which NVIDIA manufactures, have always been a very cyclical industry, and I'm not really willing to bet on the cycle continuing at today's valuation, especially given what we're starting to hear from the folks powering the spend. But for a beneficiary, I think Meta is really the one to look at. The market agrees with me. The stock is actually up over the past week. One framing of the DeepSeek news is China is catching the West and we need to be worried. But you could choose an alternative framing that says open source models, which DeepSeek is one of those, are beginning to outperform proprietary models like those that ChatGPT and Claude. DeepSeek itself was built on open source research, including Meta's Llama models. And as these breakthroughs from DeepSeek and others are incorporated into open source models, we could see costs and performance continue to pull away from closed systems. Also, moreover, if you think about AI becoming cheaper and easier to roll out, Meta's advertising platform, arguably one of the best suited to benefit and incorporate this technology. One thing to call out on their fourth quarter earnings call, They mentioned its Andromeda machine learning system that it developed in partnership with NVIDIA enabled a 10,000 times increase in the complexity of its ad retrieval models, which led to a meaningful improvement in ad quality for the company. So bring all that together, I think Meta is both positioned to be a leader on the technology and the research front and be a leader in monetizing AI. And for that reason, I think it's a company that stands to benefit, worth paying attention to today.
Awesome. Pile of information. Go Meta, no to NVIDIA, and Fool on. Thanks, Nick.
Anytime, Ian.